How does a $1.1 billion fund closure impact the multifamily real estate market? Welcome to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. Let's get right to it. The Milestone Group, a prominent private equity real estate investment firm, has announced the final closing of its sixth discretionary equity vehicle, known as Milestone Real Estate Investors Fund, VI, LP, at its hard cap of $1.1 billion. This fund was oversubscribed, highlighting a robust demand for Milestone's value-add investment strategies, despite facing a challenging fundraising environment. Chris Bartlett, the Chief Operating Officer of Milestone, expressed gratitude for the ongoing confidence and support from their investors, especially given the current dislocation in the capital markets. Bartlett noted that the strong demand for Fund VI is a testament to Milestone's 20-year track record of delivering consistent, strong performance across market cycles. He emphasized that Fund VI is strategically positioned to seize exceptional opportunities to acquire high-quality multifamily assets at attractive pricing, while maintaining a disciplined, risk-aware investment strategy. Milestone's flagship value-add investment strategy focuses on acquiring and repositioning middle-market suburban multifamily communities in high-growth U.S. markets, particularly across the Sunbelt and Mid-Atlantic regions. Fund 6 aims to target well-located, undercapitalized, and undermanaged properties with embedded growth opportunities. Jeffrey Goldberg, co-managing partner of Milestone, stated that the firm takes a solutions-oriented approach to transactions, aiming to create outcomes that deliver value for all stakeholders while positioning funds for long-term success. Milestone has a history of leveraging creative structures such as recapitalizations, debt assumptions, entity purchases, portfolio acquisitions, and rescue capital to facilitate refinancings and optimize capital structures. Since its inception, Milestone has invested over $9 billion across more than 90,000 multifamily units, consistently delivering top quartile returns based on the latest Cambridge Private Real Estate Index and Benchmark Statistics report. Fund VI has already closed on several investments, including multifamily communities in South Florida, Northern Virginia, and Denver. These acquisitions were made at a significant discount to replacement cost and are supported by strong market fundamentals. Milestone's investor base for Fund VI includes leading global institutions such as public and private pension funds, insurance companies, foundations, a sovereign wealth fund, family offices, and ultra-high net worth investors. Family offices of high net worth investors are increasingly pooling their resources into multifamily offices to access larger real estate deals. Realm, a multifamily office investment platform, has over $12 billion under management and specializes in commercial real estate. The typical family using Realm has about $200 million in investable assets. CEO Travis King shared insights with CNBC about how multifamily offices are navigating the commercial real estate market, particularly in a high-interest rate environment. According to King, the collective approach of multifamily offices provides an edge in investment decisions. By combining capital, trusted relationships, and industry knowledge, these offices can execute better investment strategies. King noted that while institutions have significantly increased their real estate allocations, many family offices are still catching up. However, there's a growing desire among family offices to diversify their portfolios with direct real estate investments, which can be time-intensive and require substantial staff if done individually. When discussing real estate strategies, King emphasized the importance of being adaptable. He mentioned the well-known adage, location, 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 but also highlighted the need to consider both macro and micro cycles in real estate. Realm's scale, with over $12 billion in investable assets, allows them to explore diverse deal flows across various geographies and property types. Interestingly, King pointed out that the office sector is becoming attractive again, with pricing reaching a point where it is considered intrinsically cheap. He cited an example of a current investment opportunity in Northern California, where properties are being acquired at 15% of their replacement cost. While some areas like data centers have seen overinvestment, King avoids broad categorizations. He prefers focusing on the lower middle market, with deals around $50 million or less, where he believes Realm has a competitive advantage. He acknowledged that the big players dominate data centers, requiring significant capital for infrastructure, which is outside Realm's investment focus. King also touched on the potential impact of interest rate changes. He believes that a reduction in interest rates would benefit real estate broadly, boosting transaction volumes and increasing property values. Lower rates would provide momentum to the real estate market, enhancing opportunities for investors. In a notable transaction, Eastham Capital, a private equity real estate firm known for its focus on transforming undervalued multifamily properties, has announced the successful disposition of the Central Park Apartments for $23.2 million. This 220-unit apartment community is located in Park Forest, a southern suburb of Chicago, Illinois. The property was part of Eastham Capital Fund VLP and was acquired in partnership with Bender Companies back in September 2019. This sale marks the second successful collaboration between Eastham and Bender, who have co-invested in 10 properties together to date. Matthew Rosenthal, the founder and managing director of Eastham Capital, expressed satisfaction with the investment's performance, attributing its success to their value-add investment strategy. He highlighted the strong partnership with Bender Companies, which significantly contributed to the property's enhanced appearance and profitability. Over the 6-year hold period, the property underwent substantial exterior renovations, including parking lot resurfacing, sidewalk repairs, and patio concrete upgrades, which boosted its appeal and financial performance. Built in 1946, Central Park Apartments has consistently maintained excellent occupancy levels, averaging over 97% throughout Eastham's ownership. The community features a mix of one-bedroom apartments and 2- and 3-bedroom townhomes, offering amenities such as hardwood floors, ample storage, and walk-in closets. Its location, just 25 miles south of the Chicago Loop, provides convenient access to downtown Park Forest's dining and shopping options. Eastham Capital's successful disposition of Central Park Apartments underscores the effectiveness of their investment approach, particularly in the Chicago suburban market. The firm's ability to create value through strategic improvements and strong partnerships continues to deliver impressive returns for their investors. This sale further solidifies Eastham's reputation as a leader in the multifamily real estate sector. Thank you for listening to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. See you on the next one.